Hi there. In the last video of chapter 8, we've studied petty cash. What are the remainders of the topic of cash? Okay, the next topic is about reconciliation between your book cash balance, like on your company's recording, how much cash is left at the end of a period, like in this case, April 30th. Your book shows that the cash left in your account is in total $11,709.45. Okay, and then because it's at the end of the month, you can get the cash balance, the bank statement for your cash balance. And then bank statement shows that you have cash balance of $15,907.45. Wow, what's up? On our book, it is $11,000, and in our bank statement, it is $15,000. You are not surprised, right? We often see that. The cash on my understanding of cash is often different from the what bank statement shows, because of mismatch between your recognition of the transaction and the timing of the recognition of the transactions, right? Some of the popular examples include deposits in transit. Like in this case, the company sent $2,000 to be deposited in your bank's checking account, but it is still in transit, right? Have you ever brought like $2,000 in your pocket to deposit in a bank? Wow, I did a few times, and it's pretty scary, right? Like I feel that everybody is looking at me, even though nobody can see the thousands of dollars in my pocket, but it's pretty scary. So many companies hire some of the security guards to deposit the money. Okay, this company there asked the security company to deposit $2,000 at like 4 p.m. on April 30th. So they brought out that $2,000, but they found that the bank is already closed, so they couldn't deposit it yet. In such a case, you should add that amount to your cash balance on your bank statement, printed in your bank statement, reaching up the balance up to $18,000. That's not the end of the road. You have signed a few of the checks, check number 453, 57, 460, and gave it to your suppliers, $3,000, $1,400, $1,500. In total, $5,900 value amount of checks are outstanding, but they are not cashed yet, right? If you give a check to your friend, then most likely they do not cash it out in a few days. It takes a few days for them to cash it out. Then even though you have written down, you have signed on a few of your checks, the bank statement does not reflect the fact. They do not know, right? So as a result, you should take it out, deduct them out, $5,900 from $18,000. As a result, you have adjusted cash balance per bank, $12,000. Okay, then what are our adjustments to the book cash balance? It is possible that after you closed your book, you didn't realize, but you found out later that you've received $1,000 from electronic fund transfer, like somebody wired money to you. Your customer wired money to you, $1,000. So you add them up. And then found that there is some error in your recording of check, outstanding check. In such a case, banks will charge some money, right? Oh, sorry, this is not the case. This is your recording, your own recording error in your recording. So you, and it is assumed that you have recorded a lower 39 less. So you add them back, reaching to your balance from 11, adding up $1,000, which is now $12,000. Okay, these are additions to your cash balance per book. Then what else as deductions from your cash balance per book can you think of? Most likely, most popular would be NSF, not sufficient fund checks. Like you received a few checks from your friends, and then found you tried to cash them out, and then found that the bank says, oh, unfortunately, your friend does not have enough money in his or her checking account. What? Right? Then you cannot cash it out, right? You thought that when you received your 425 check, dollar value amount check from your friend, you thought that you received the cash and you counted it in, right, in your cash account, but found out that, oh, it's not out there, right? So you subtract it out, and in such a bad case, right, it is possible, in such an unfortunate case, the banks charge you money, $30. Oh my, right? And there are some fees, related fees. So in total, you need to subtract out $575. You subtracted out $575 from $12,000, and then you end up having $12,204.85, which is the same as your adjustment to your bank statement, right? You should confirm every period end that the two are the same. This is a simple example of reconciliation of the bank account and your book account of cash. Okay. Another, the last topic in cash, the chapter 8 is cash and cash equivalents. Okay, we know what is cash, but what are cash equivalents? If you can cash some sort of asset in 3 months, then they are regarded as the same as cash and called as cash equivalents. What are they? Treasury bills. You know that Fed sometimes prints paper and then asks investors, give me your money, right? With some interest, right? These treasury bills and bonds have maturities of beginning from 3 months to like 10 years. Those that has maturity less than maturity of 3 months are called treasury bills, and they are regarded as cash equivalents. Oftentimes, companies borrow money, most likely do not pay cash, but give a piece of paper to your suppliers, promising that we will return back the money in 3 months, okay, with some interest. They are called commercial paper. They are not notes payable. Notes payables are for long term, like more than 3 months, sometimes more than 1 year. But if they are less than 3 months, then they are called commercial papers, and they are regarded as cash equivalents. Money market fund. Financial institutions often make money based on their overnight transactions with other financial institutions. And investors often can open a fund called MMF, money market fund, and then earn the interest rate of based on these overnight transactions. So they are very small, like much less than 1%. Okay, these are regarded as cash equivalents, cash and cash equivalents. And as we saw, they are most likely in the current assets part, right? But most likely, there are some exceptions. Like when companies have a plan, a company has a plan to use the money much later, like 1 or 2 years or 3 years later, then they oftentimes regard the cash as other assets, part of long-term assets. Okay? In this case, Delta Airlines, we can see that Delta has restricted cash of $122, which is different from cash and cash equivalents. Okay, maybe Delta is planning to use the money for some different purposes, but they plan to use it in 1 year, but much later than 3 months. Right? Okay, these are examples of cash and cash equivalents. Shall we have a look at some real-world cases?